Yeah, hello, what's up, guys? My name is Vasco Smart. Welcome to my mentorship program. So, today we continue with our topic. We have been discussing all about the market structure, the institutional market structure, episode 4. So, we understand how the pattern work. Like, I give out the outworks of the patterns in the episode 1 and episode 2 of the YouTube mentorship, the playlist, which I call the institutional market structure. So, but for today, we'll be looking at more examples and we'll be moving advancedly on the topic. But today we'll be looking at something called the advanced price action theory. So, which is the episode 4 for the institutional market structure, the advanced price action theory. So, we'll be making use of gold. And on this chart here, I have an entry. I have an entry on this chart. So, which means that if you look at the chart you're looking at right now, I have an entry on the chart, and this entry on this chart shows and gives me that the market structure patterns that we have been looking at from the past 3 videos is actually at work. This was actually last week. The last week you can see January 2022, 2024, 22 of January 2024. So you can see how everything's work out for each others. So, but today we're just trying to look how we can combine um two time frame together and how we can trade with price action with the theory that we have been derived after. So before I open up this chart or before I let us just do some recap on how the patterns look like. Okay. Okay, let's say we have a bearish market. We have bearish market is bearish in nature. Then when market get to a certain place, the market get to a certain place, this certain place that market get to can actually conclude as higher time frame level. So which means that that zone exactly is an higher time frame levels. Then we see market it trace up. Then when market it trace up, market was unable to take out this high. The market went down back. Then when market went back down back, it was unable also to take out this low. The market breaks this structure. Then the moment market breaks this structure, so you can see that there's 3 things included: 1, 2, and 3. So when market breaks down the structure, we can call it as what? Market structure shift. So this means that there's a market structure shift at that particular zone of the market. So which means I will have to target either a fair value gap or an order block at this zone for me to be an entry and for market to go buy. So this actually shows that market is actually rejecting itself down for to change the movement. So to change the movement. And another important thing is that for you to use this kind of patterns or for you to use this strategy, you need to understand the current market narrative. So you need to understand what actually is market doing at that particular point of time. What actually is market trying to do or what do they want to offer. That's why I said the important thing or most like an important thing here is that you have to make sure that this zone that I drew out here must be an higher time frame POI. So which means that when market get to that POI, it can be a fair value gap, it can be a supply, a demand, it can be anything that is known as a point of interest. So when market get to that zone, everything you just want to think of right now is that okay, it can also be a liquidity zone token. Like market can take out a liquidity in higher time frame zone. So it can be 1 hour, it can be daily, it can be 4 hours, it can be weekly and monthly. So when market do that, on this I am trading on 15 minutes. Don't forget our last video, we trade on 1 hour. The example I made was on 1 hour, but today you are trading on 15-minute time frame. So which means that I have already taken it down to an intraday analysis. So I don't actually use 15 minutes for an intraday. I use 5 minutes, 3 minutes for intraday. But just that 15 minutes is the higher time frame in an intraday analysis. You understand? So now the market get to this particular zone I'm having here. And I saw this, the next I saw this. So which means that first thing I have to see is one, the second is two, third is three. Then I want to see this as my what? My entry. So when this occur, then I want to be a buyer. I have 70 or 80% certain the market is going to be a buyer at that point. Why? Because that is just a leg that the market shows up. So we call this a short time low. That's short time low. We call this an intermediate time low. Sorry, that's L. ITL. Then we call this a short time low. This low, this low, and this low. Those are the three important. Those are the three market patterns that you want to see. Then the entry is this, a fair value gap, an order block, or a particular zone or mitigation block. It can be a mitigation block, it can be a proportion block also. It can just be an entry. Somebody can give you a little bit confidence. I always tell you something very important. You are not trading a particular you're not trading a particular fundamental way of the market. You are only trading your belief. As I see a buy here, someone else can look at it and see a sell. That is what the person believes. That is what I believe. There is no fundamental way of market being traded. Market can do anything at any time he wants. So we're only trading what we think is right. So, and if you have this kind of mindset, you surely understand that nobody is a master in the market. Market can do anything at them want. Nobody is a kind of 100% master. So we are only working toward perfection, working toward the way we can actually secure financial breakthrough for ourselves and let the market work for us. So with this kind of mindset, you are going to bring yourself into a realm that you will not force market anymore. You won't be forcing market anymore. You will just let market place according to the way you want market to be. You won't put emotion again in the market. So this is it now. Let me clear this off. Okay. Now look at the chart for just a few minutes. Look at the chart. Just look at it. I don't want you, even if you don't get it right, just look at it. Just look at what you can see yourself. Look at why do you think this, according to the patterns, why do you think you can see? What do you think you can see? Okay, now let me just bring it up. If you like, don't pause it. So this is market here. You can see market break structure here. I'm like, okay, we're in bearish. The market comes down again, then market goes up, it trades back into here, to the other block here, and comes down again. If we found a low and a low, the market will trade back. The market could not break this structure, so which means I think okay, now market want to continue with the sell. The market goes down again, market could not take this low, and I was like, okay, fine, what market trying to do? Then the market comes all the way back and give me a market structure shift. And when market structure shift occur, I found this fair value gap. It was in a 1 hour chart. Let us check 1 hour chart. Okay. Okay, so this is the 1 hour chart I was looking at. This is the 1 hour chart fair value. You can see the fair value gap. It was 1 hour chart. I saw it. So when I take it back to 15 minutes, I found out that there's another fair value gap inside the 1 hour fair value gap. And I put my entry at this fair value gap. I was aiming for a peps that is kind of favorable. For this is pattern here, a short time low, an intermediate time low, short time low, then the entry points. Then you can see how market plays out. So let me show you my here. So you can see it here. When I was looking at the market, short time low, intermediate time low, short time low. Then I was looking at this whole thing. You can see where I put my take profit. I did not put my take profit above based on the fact that market has been consolidating on 1 hour chart. Like market was going up and down. So it wasn't favorable to me. So that's why I put my entry take profit at that point. So I can see that I really took the take profit. This is the market here. So that is that for the market. So that is that for the market, and that is that for the market. So you can see it here how everything played out. The short time low, the short time low, the intermediate time low, then the fair value gap, how market entered into the fair value gap and give me a nice buy to my take profit. And you can just ask me why don't you put your take profit here? Why are you not trading here? The only thing I had was that okay, fine. If you check let's check the 1 hour. Let me so because today we are only learning about the theory to go up aspect of the market. And let's check the 1 hour because I actually found out recently that trading is not meant to just be something you have to put your emotion on it. Like you can see the 1 hour here now. You can see the week has been so up and down. Market, yeah, I was thinking market was bearish, market was bullish, just and I was looking, if you look at this zone here, let me check, let me let you to see something here. If you look at this zone, so if you look at the zone here, you see that market retrace here, market retrace here, and market retrace here. So you can see that is why I put my take profit at this zone so that at least market is going to come back to retrace the supply zone. Market is going to come to the supply zone. Do you understand? So that's why I put my take profit at that place. So if you go back to 15 minutes and you see something you have to see here, you found out something else again. I drew out a zone. So I was looking at, if you look at this inside the fair value gap, you can see something I saw again, a short time low, intermediate time low, short time low. And what happened? Market plays out where this stop loss was not hit. Market did not hit the stop loss. Market took out the buys again. You can see how everything worked in hands for everything. So thank you very much. Like, share, and subscribe. I'll be expecting you more and more. Another video is coming out again. I'm going to let you guys know. Thank you.